The headline this week is oil prices are trumping the economic news. And that's really the name of the game. That's the story, and we've seen it play out this week. We'll get into that and so much more on today's housing market update. All right, for the big three, prices are steady. Actually a little up if you're single family homes, just flat if you're a condo. And we're talking Oahu housing market. Inventory is up. We're moving back towards that 3,000 level. And then rates. We'll get into this at the end, but rates have gone up and all the gains were basically lost that we've had since the beginning of February. All those gains gone. But the good news is we're still under 6%. But the question is, for how long? I think the answer to that is going to be, how much longer are we going to be in major combat operations in Iran? Let's look at the headline news. Hey, we already talked about oil prices are trumping the economic news locally. We have the HBR Honolulu Board of Realtors housing market update for the month of February come out. Pretty flat. Slowing down a little bit, and that's normal for this time of the year. Inflation, we had one inflation report already come out this week, and that was as expected, but that doesn't take into consideration the major combat operations in Iran. We have existing home sales report that came out this week. That was it. Actually, that was a pretty good rebound from what we saw in January. We're going to get into the question of when is the perfect time to buy? How do you time the market? That's tough to do. We'll get into that. We have an FAQ Friday for you, and then we'll get into the VA rates and see where we're at as compared to where we were really just a week ago. So let's go to the news that's really impacting rates in the global economy. That is the Strait of Hormuz. The Iranian Revolutionary Guard has said the strait is closed. This is such a narrow choke point for all of oil leaving the Middle East, and fully 20% of the world's oil comes from Iran and the rest of the countries in the Middle East. It is slowing down the flow, and it's not just impacting us, not just impacting those countries in the Middle East, but really it's a global economy. You know, China uses over 45% of its oil from Iran. So how do we get the shipping going? Well, there's over 150 ships that are either on either side of the strait. When they're not transiting, they're sitting ducks. When they're moving, they're sitting ducks. The Navy, or President Trump, has said we will have naval escorts for the shipping, but you know what? But we are limited on the number of ships that we have that can actually do those escorts, and the impact that the Navy ships are going to have are minimal because you can't have a U.S. Navy destroyer do the escort operations because they're a sitting duck too. It's not like a Navy destroyer can use its missiles. You're too close. You got people who are 100 yards from you, basically, with shoulder-launched missiles. They could take out a ship. All right, a Navy destroyer is $1 billion ship, not to mention the 300 or so sailors on that ship, which we certainly can't afford to lose. So we're not going to use our best ships to escort oil through the Strait of Hormuz. We're going to have to rely on our smaller combat patrol craft, and there aren't that many. We'll probably need to bring more nations in if they decide to cooperate with us to help the shipping get through. It's very difficult. You see from the picture, it's a lot of land. All right, and while they may not have any naval craft left in the Iranian Navy, it doesn't take much to bring out a shoulder-launched weapon or to put a drone in the water, an unmanned mobile vehicle. This is something that we got to fix quick. Escort operations, yeah, we can do it, but it's still going to limit the flow through in and out of the Gulf. Actually, the longer we stay in this major combat operation with Iran, and Iran is, doing whatever they can to stop the shipping, which is their goal. They know that if oil prices go up, and we've already had Brent crude oil prices up over $100 a barrel, the longer this goes on, the less support the U.S. is going to have, and quite frankly, the less support our administration and Israel are going to have to continue in these major combat operations. We need a swift end so we can get the oil prices back down and really get some safety and peace into this region. All right, let's go local. We had the Honolulu Board of Realtors housing market report come out, and Oahu single family homes rise, and we actually got a new record for the median sales price. We eclipsed 1.2 million. We're at 1.205 million as the median sales price for single family homes. That's great. Median sales price for condos, steady at 500,000. We've been there for a while. That's where we're going to stay. Home sales up year over year, 6% for single family and slightly down for condos. But let's break it down by month. February, we saw a slowdown in closed sales, but it's really kind of in line with what we saw last year. We had a 6% increase last year, 167 last year, 177 for single family homes. Condos just down slightly, not too much. Median sales price is steady, maybe up a bit, up again, a new record, 1.205. And then we also had a condo drop a little bit, but again, we're in that $500,000 plateau. Days on market, huge difference between single family homes and condos. You can see median days on market drop from 27 down to 17 for single family homes. Guess what part of the market's hot, people? Single family homes. If you're trying to get a single family home, that inventory is still low and the competition is picking up. Condos, on the other hand, condos went up from 47 to 56 days on market. So buyer's market for condos, part of that reason is because of HOAs, but there are some great deals out there in Oahu if you're working with the right realtor and if you are ready to pull the trigger. And we're going to talk about timing here in just a few minutes. We also saw new listings drop. New listings drop a lot, but again, this is normal for this time of the year. We'll take a look at that graph. Months of supply up for condos from 6 to 6.2, and then steady 2.8 months for single family homes. We are squarely, this shows the difference in we got two different markets. We got the single family home market, a more balanced market right now. It just really depends on the area. You got some homes that are sitting on the market for a lot longer in some price ranges, but overall, I would say we're still a slight seller's market, definite seller's market in Kailua, Hawaii Kai, Kaneohe, even Mililani. We are definitely in a seller's market in those areas, but single family homes in Ewa Beach starting to go quickly too, multiple offers. And we're talking, anywhere under 1.5 million, single family home with a very small or no HOA, it's going to go quick. And then we go to condos. Again, condos, totally different market. All right, 6.2 months in Oahu, that is a buyer's market. And we're seeing that. Lots of great prices, price reductions, great credits, $20,000 to $40,000 seller credits that are helping you to buy down your rate to pay your closing costs. That's a great way to get into a home with no money out of pocket. Take a quick look at new listings. We can see big drop in listings for February after a huge rise in new listings for the month of January. And is that a hangover? I think that's probably the hangover from a strong January, but it's pretty normal if you go back and look over time. The last couple of years, every February, we see a slight drop in new listings, and that's really no surprise this time. We'll take a look at active inventory. We're inching closer to that 3,000 mark. Home prices below 500,000 accounted for almost 50% of all sales last month. About 149 sales overall in February. Single family homes sales between 500,000 and 1 million have risen 28%. year over year. Again, just showing how strong that single family home market is. Inventory of condos below $400,000 increased the most, climbing to 27.6% to 786 listings. Folks, you were talking, a lot of these are in town, a lot of these are in Waianae. There are a lot, you go to pretty much any condo and you're seeing multiple units on the market. We're not talking one or two, we're talking 10, 12 units on the market in many condos, especially in town where there's maybe some assessments or they have higher insurance. So really a lot of opportunity for buyers out there right now. Let's take a look at the median sales price. You see that we hit an all-time high. The green is single family homes and we hit that 1.2 million mark. That's great news for single owners of single family homes. And again, people who are thought, well, you know, is it a good time? Is it a bad time? Well, I tell you what's going to happen next for single family homes? Once we get past this 1.2, probably need a couple months past 1.2 million for single family homes. What's that next tier going to be? Is it going to be 1.3? Is it going to be 1.4 million? Well, interest rates are going to impact that somewhat, but there is so much pent up demand across the country. I have more people looking right now than I have had really in the last couple years. There is a lot of demand. If rates come back down, expect single family home prices to continue that rise. Condos, I think until we get interest rates squarely in the mid fives, you're probably going to see a steady out at that 500,000 plateau. The first inflation report to come out this week was the Consumer Price Index. This is for the month of February. Again, we didn't start major combat operations until March, so all the increase in oil prices and energy prices, those are not in this report. This was a good report. February inflation was encouraging. And the headline stayed at 2.4. Remember, the Fed's goal is 2%. Headline core stayed at 2.5%. That is the lowest core inflation rate in the last 5 years, people. That is excellent news. And we're starting to see shelter costs come down, in particular rent, which has been playing catch up for a couple years now. It only rose by 0.1%, which is the lowest monthly increase in the last 5 years. So a very good CPI report. On Friday, we're going to get the PCE, which is a personal consumption expenditure report. But that report isn't for February, it's for January. So it's even it's another month behind. So again, not going to really show the impact of inflation going up at all due to the oil issues we have with the Strait of Hormuz. And we got the existing home sales report for the month of February. It is a rebound from the month of January, which was really ugly, up 1.7% month over month. A 0.5% decrease was actually expected. And the annualized pace is 4.09 million, not where we need. We need a 5 million annualized pace, but we need to see those numbers keep going up. So that is encouraging. Months of supply, though, down to 3.8 months of supply. 47 days on market, up from 42 the previous month. So big jump again, shows an overall slowing market. And here's some good news though. 34% of home buyers in the month of February were first-time home buyers. That should be very encouraging. Typically we're right around 30%, maybe 31%. But if we can see those numbers keep going up, that's very good for those first-time home buyers. Remember, National Association of Realtors says the average age of the first-time home buyer is 40 years old or 38 years old. 38 years old, which is still, I think, way too high. And I think that number is a little off, but regardless, it is difficult for young people to buy homes. Mortgage apps continue to be up. Purchases were up 8% last week. Refinances were up 1% last week. So overall, very solid existing home sales report. And especially in light of the fact that February is typically a very slow month for home sales across the country. Now let's talk about timing the market. It is very difficult to time the market. It's almost impossible to time it perfectly because the market is so unpredictable. Whether it's real estate trends, they change all the time. Just look at where we're at right now with interest rates. We were looking great, and we'll show you that. But you know what? Things happen. Things happen around the world. That impacts interest rates. So you have to deal with that. Your circumstances matter more. It's not so much time in the market. It's just getting your financial house in order before you buy that home. Do you have a job? Do you have job stability? Is your credit score up? Is your debt paid down? Those are things that you control. Those circumstances matter more, I would say, than timing the market. You got to get your financial house in order first. And homes don't wait. People are waiting for that $500,000. They want to see that $500,000 home. They want to wait until rates come down. Hey, homes don't wait. That home's going to sell. And if it does, the neighbor house comes on the market when rates are lower, you're paying more for that house than you could have just bought for $500,000. Now you're buying at $550,000. So again, homes don't wait. The right home doesn't wait. We're especially seeing that for single family homes right now. People are smart and they see the house, they want it, they're buying it. They're not worried about their rate. They're worried about, their mortgage payment, but they know your first rate is not your last rate. And you're going to refinance, especially people who have owned homes in the past. They know that. Every home I've ever owned, I've refinanced some 2-3 times as rates came down. The only one I haven't is the one that's at 7.125%. But guess what? That's going to happen here pretty soon. Rates and prices don't move in lockstep. There's always a lag on that. Rates go up, home prices go down, typically, or stay the same here. In this market, because we have such low supply, home prices stay pretty stable. Rates go down, home prices are going to skyrocket. We're going to see that. We started to see that already. We'll see what happens in March and April if the major combat operations continue on. But rates and prices don't always move in lockstep. They don't move together. They move opposite, quite frankly. The bottom line here is very difficult to time the market. There's what's that saying? The best time to buy a home was yesterday. The next best time is today. I really do believe that holds true. If I would have known that, I would have bought a home long before my first time. I was 35 when I bought my first home. If I were smart and I knew better, I would have bought when I was 21 or 22 because I could have afforded it. I just didn't know because, hey, I come from a family of renters. It just wasn't in my DNA to buy a home that early. I had to come to that decision. Timing the market is very difficult. The key, get your financial house in order. When you're ready, make the move. The FAQ Friday is there a difference between a pre-qualification and a pre-approval? Well, there is, and I'm going to take that pre-approval and add another step to that because I think it's super important. One of the things that we do at the broker that differentiates us, I think, from most lenders around is what we do after the pre-approval. We'll call it the pre-approval plus. Now, what's a pre-qual? What's the difference? Well, a pre-qual, I'm not looking at everything. A pre-qual, I may pull your credit. I may do a soft pull on your credit. I may have you send a credit report to me, and I'm not necessarily going to see your taxes. I may not see your income. This isn't me, but this is a lender in particular, a generic lender, but they're going to give you a pre-qualification. In the housing markets that we've been in, actually since I've been a lender, you can't make an offer on a pre-qualification, or you're not likely going to get an offer accepted if you submit with just a pre-qual. So what's the difference between a pre-qual and a pre-approval? A pre-approval is a lot more in depth. Definitely going to pull your credit, definitely going to review your income, your assets, your tax returns, your W-2s. We're going full in on your finances on a pre-approval. And here's a big difference. When that pre-approval goes in, you have a good chance. If it's a pre-qual, you probably got no chance, especially if there are other offers in. You got a pre-qual, everyone else has got pre-approvals. Guess what? You're not getting that home. And here at the broker, here's what we do. It's a little different. I call it the pre-approval plus. I am always going to pre-approve you as high as you can go. And then we're going to have that meeting. And in that meeting, we're going to figure out what is your budget. Because you may be pre-approved for $1 million, but your budget may be saying $800,000. And we're going to figure out the left and right limits of your budget so that when you go into contract, you're not surprised at the mortgage payment that you're going to get, and you're not going to be house poor. Because believe me, that is the last thing we want, and the last thing you want is to be house poor. So we'll call that the pre-approval plus. Big difference between the pre-approval plus, a pre-approval, and a pre-qualification, right? When you're just getting started, maybe a pre-qual, but when you want to start putting in offers, you got to have that pre-approval. And for peace of mind, I would say you also need that pre-approval plus. And that's something we do at the broker. And finally, let's take a look at VA rates. This week, we have seen a huge uptick in interest rates. We were down at 5.6% at the beginning of last week, and now we are at 5.9%. All the gains that we have seen since February are gone. But again, the silver lining is we're still below 6%. Where would we be if we weren't doing major combat operations in Iran right now? We might actually be at 5.5%. And I'm not saying that what we're doing in Iran is wrong. Not saying that at all, but the trend of the housing market and the trend of interest rates was down until we went into Iran. And I think this is short term. I think once we get through this major combat operation in Iran, call it a war, call it what you will. Once we get past that and we cease the hostilities, then you'll start seeing interest rates come down. There will be some pain though, because there is an impact of oil prices, energy prices rising. So just something to keep an eye on. Again, still below 6%. To me, that's great news. We are almost a point lower, at least half a point, 3/4 of a point lower than where we were last year at this time. So what's coming up next? Well, tomorrow or Friday when this comes out, we get the PCE report. Like I talked about earlier, it's probably, the expectation is at 3%. It may come in at 3%, 3.1% core. Not going to really move the market too much, simply because the oil trumps the economic reports. And next week is a Fed meeting. And if we weren't doing what we're doing in Iran right now, I would say there's a good chance that the Fed, based on that jobs report we received last Friday and the steady low inflation that we have right now, I think there is a pretty good chance that the Fed would lower the Fed funds rate. At this point, where we're at with oil prices going up, the fear of inflation going back up, based on what's going on in Iran right now, almost no chance the Fed lowers the Fed funds rate. They're going to push that baby 1 month to the right, at least. All right, that's what I got for you this week. You have a great week. Talk to you later. Aloha.